I listen to Larry Fink and I listen to Ray Dalio. I say that the institutional age is upon us and it'll happen quickly. And you're going to be staring down the barrel of $200,000 Bitcoin by this time next year. Bitcoin was at 12,000, and thankfully I held every Bitcoin and actually added to it. And now it's crashing down to 84,000. So, I mean, to me, people got to take a chill.
The financial elite are waking up to Bitcoin, and Anthony Scaramucci is here to break it all down. From BlackRock's aggressive push into crypto to Wall Street legends like Ken Griffin and Larry Fink making major moves, the institutional floodgates are opening. But with the noise of politics, market turbulence, and regulatory uncertainty, how will this shape the future of Bitcoin? Scaramucci doesn't hold back as he dives into why institutions are embracing crypto, why the skeptics are wrong, and why Bitcoin's path to $200,000 might be closer than you think. Stay tuned, hit that like button, and if you're serious about understanding where Bitcoin is headed, make sure to subscribe and turn on notifications. Let's get into it.
Say that it's a retail-focused issue. I would say that when I'm in the marketplace talking to institutions, or I'm out with guys at BlackRock that put together this wonderful PowerPoint presentation that they're using to explain to people that they need to own some of this. And I would say that the sovereigns, some of which have already announced that they own some of these positions in the ETF, I would say that it's understood from the first Trump administration that unfortunately with Donald Trump, we're going to get this noise and this petulance and this nonsense. And so then the real question is this a real asset class that I need to be a part of? Do I understand this asset class well enough now to be a part of it? And I would say to you, on the increment, the slope of that is moving in the direction that you and I would like. $450 million into Mubadala, a couple $100 million into the state of Wisconsin. Other players are in the game. You mentioned Ken Griffin at Citadel. Ken has said to people, I've got to go where the buck is. I got to start making markets in this asset known as Bitcoin. And so when I hear that, and I listen to Larry Fink, and I listen to Ray Dalio, and I listened to Abigail Johnson from Fidelity and Jenny Johnson from Franklin Templeton, no relation, both named Johnson. I say that the institutional age is upon us and it'll happen quickly. And you're going to be staring down the barrel of $200,000 Bitcoin by this time next year. And people are like, no, it shouldn't be that. It got whacked from 108 to 84. Imagine you and I, a few years ago, saying, "Oh, we're really upset, Scott. We crashed
a year ago."
Okay, we crashed from 108 to 84. Or imagine when I was getting my what kicked from Sam Bankman-Fried, and Bitcoin was at 12,000, and thankfully I held every Bitcoin and actually added to it, and now it's crashing down to 84,000. So, I mean, to me, people got to take a chill. They got to understand the nature of the asset. And then you have to ask yourself, is this asset what I think it is? Is this asset a form of digital gold long-term? Is this asset an immutable, fully decentralized, fully transparent spreadsheet that's accessible to everybody? Is this asset for the underbanked? Is this a populist asset? Is this an institutional asset? Is this what Saylor calls it, the operating software for money in the future? And if it is, then you got to sit tight and you got to ride it out, and you got to let the governments and you got to let the institutions catch up. But I think the noise in the marketplace is scaring retail investors more than it is institutions at this point.
I recall a previous conversation where you told me your Larry Fink story, because I asked you if he had truly been orange pilled or if he was just, as you sort of said, skating to where the puck was. There was obvious money to be made in this groundswell around it. you basically told this incredible story about, going to the Four Seasons. He told you were an idiot, and then he came around a couple of years later, truly orange pilled. How do you view a Ken Griffin who's coming in and saying,
Al Marion Island. I can tell you exactly where it was. It was during Abu Dhabi Finance Week. We were standing in the lobby together, and I give him a lot of credit. I think I said to you in that podcast, this is a real leader. Real leaders change their opinion as facts are unfolding, or they get more knowledge about something, right? When Galileo figured out we were rotating around the sun and we weren't in a geocentric position where the Earth and everything out was moving around the Earth, he spoke about it. Now, the real leadership would have embraced it. The Pope told me he needed to apologize. I think Fink is a real leader. I have a lot of respect for him.
So what about the Jamie Dimons and the Ken Griffin? So we obviously see what Jamie Dimon says, but we see what JP Morgan does, right? And they're very heavily invested in this market, offering it to their wealthy clients, obviously utilizing the technology. And now you have Ken Griffin from Citadel saying we're going to make markets in this space. Making markets smells to me of, and not in a negative way, but we need to be in there because there's money to be made and somebody has to do it. That doesn't seem like the Larry Fink orange-pilled school of Bitcoin thought. Yeah. And maybe Jamie Dimon is the same and just hates it, but wants to make money on it. But these other leaders of these huge institutions, do you think they go full Fink, or do you think that they're just here for the money?
Well, it's probably a combination of both. But I mean, let me give you my personal observation because I know these people. I think in Jamie's case, one of the smartest people I know in the world of financial services, arguably the most successful financial services CEO, but he's under tremendous regulatory scrutiny. And so him being negative, saying that he's negative on Bitcoin while pursuing a Bitcoin research, Bitcoin growth, Bitcoin tokenization, JP Morgan coin, and doing all this stuff for the blockchain at the same time, I don't think it's that bad of a strategy. If I was his chief political officer, I would say stay right where you are, Jamie. There's no reason for you to do anything different. Moreover, Jamie's out there praising Doge. Jamie's out there praising Trump. Jamie's a lifelong Democrat. I think he's very smart corporate operative. And he's like, why do I need to get into a fight with Elon Musk or Donald Trump at this stage of my career? Or why do I need to put pressure on my company? It's a very, very successful, if not the most successful American bank in U.S. history. So that's Jamie. He may dislike Bitcoin.
He's well hedged.
Yes, he may dislike Bitcoin, but the flip side is he's not stupid. He's smart enough to know that Bitcoin has a future at this point. I think zero's off the table. Ken is a different story. I think Ken built a business. You have to be very careful when you're Ken Griffin, because if you've built this amazing business, okay, let's say you're the biggest typewriter manufacturer in the world, and you're manufacturing these great electric typewriters, and you're sending them everywhere, and then all of a sudden this word processing system comes into place. It's very, very hard to shoot the typewriter business. It's just very, very hard. Steve Jobs, he was asked something, I think it was 2008, maybe 2009. He killed a very successful product called the iPod. You remember the iPod? You're old enough.
Of course.
And so what the hell did you do? Why'd you kill the iPod? He said, well, I had to. I shot the iPod and I put it in the iPhone. Because if I didn't do it, somebody else was going to do it, right? And these are brilliant business leaders, brilliant business executives that are adapting. And so this man has built a great business on stocks, clearing them, trading them, lightning fast electronic trading, et cetera. He's built a hedge fund business, and he's a brilliant guy. But now there's a new world, and he's got to embrace the new world. And I applaud him for seeing it. Now, he may be a skeptic because I started as a skeptic, Scott. If you met me in 2018, 2019, I thought, oh, you know what I would have said to you? Ready? You'll love this cliche. Ready? I would have said, oh, I hate Bitcoin, Scott, but the blockchain has promise.
Jamie Dimon.
What's that?
That's Jamie Dimon these days, yeah.
Let me tell you, when I hear that, when I hear, oh, I hate Bitcoin, but the blockchain, Bitcoin, no, blockchain, yes. I'm like, okay, this son of a bitch is 7 years later than me to the starting block. That's what I hear when somebody says that. So that, I don't blame these guys. I mean, they've made fortunes in the typewriter business, and so now they've got word processing. They got to make an adjustment.
So the adjustment starts with incorporating it into their core business. Obviously,
Correct.
market making, just that's free money. Obviously, providing a tight spread. But at what point does a Citadel then start to view it as a fundamentally important asset class and maybe start to incorporate the technology itself? Because on the one, it's an opportunity to make a bunch of money. It's another asset. There's volume, right? Easy. But on the other, it's, oh crap, this is peer-to-peer transacting. There's not going to be third parties like us in between. There's going to be immediate settlement and not T+1, and this disrupts our core business, right? Is this like Kodak and the digital camera comes along and Kodak doesn't react?
Kodak invented it.
Yeah.
Kodak invented it. They told the scientists at Kodak, put that away. We're selling the film. Kodak invented the digital camera. Let me flip it back to you for a second, okay? You're a man that owns Bitcoin. And if I told you right now Bitcoin is going to trade to 50,000 or 150,000, are you honestly going to be surprised by either of those two prices?
Not even if it was next month.
Okay, no, right. In the next 10 trading days, okay? But if you're Ken Griffin and you made your money through market making, you made your money through gradualism, and you made your money through hedged bets around the world, and you looked at an asset that had that bandwidth, you may not be as comfortable with it as you or I are, right? You're looking at that saying, okay, I get that. That's going to go 50 to 150 on its way to 450, and I just have to be patient. The world's going to see what I see. I was at breakfast. If he listens to your podcast, probably going to be mad at me. I was at breakfast with Sean Ford. Do you know who Sean Ford is?
I don't know Sean. No.
Okay, so Sean Ford was one of the early investors in Algorand. I still have a position there. And I said to Sean, you and I see something, okay? But I don't see myself as the smartest person in the room. In fact, I know I'm not the smartest person in the room. And I said to Sean, you and I see something. There's some really smart people that don't see it. Warren Buffett, this guy's baba. A lot of guys don't see it. So then, are we stupid? Or are they stupid? Or what do we see that they don't see? And why do we see it and they don't see it? Okay. So you want to hear what he said?
Yeah, I'd love to.
Yeah. He said that sometimes in life, you don't want to overthink something. Sometimes in life, you see something in its simplicity. This is something Saylor said to me. He said, when I finally got the Satoshi white paper, it was so elegant and it was so simple. It's like, okay, this can't be. This is too good to be true. Anthony, I've received the final exam answers to the final exam. It's 2 days before college graduation. I've got all the answers to the test 2 nights before the exam. That's the Satoshi white paper. And so sometimes you can be so smart, Scott Melker, that you could overthink something. And it may require you not to be that smart. You may need to be just seeing the obvious for what it is and accepting it as obvious.